Hi everyone, hope you're doing well. I'm just going to do a video here about the upcoming end of the financial year and maybe what you might find interesting to do before then. So before we get started, if you'd like, comment, subscribe, that'd be great. So the financial year, it's March 22nd today, Sunday. You've got 2 weeks, so up until midnight of April the 5th, 2026, to put in, any additional amounts that you want to put in your ISA allowance, assuming you've not used them all up. So very briefly, these are, you've got £20,000 limit, between April the 6th, 2025 and April the 5th, 2026, which is the upcoming end to the financial year. And obviously of that, £4,000 can go into a lifetime ISA. So I'll direct towards the lifetime ISA video here because I won't be able to cover it in the time. But basically, if you're planning to buy, a house in like a year or so's time anyway, then a lifetime ISA can be very good because, regardless of how the market performs, you're putting in £4,000 or up to £4,000 and you get 25% of what you put in and you get regular interest on top. So, if you've got £4,000, you can get a guaranteed £1,000 return straight away before any interest, which is, can well be market beating. Obviously, the restriction is it's only up to 4,000 of the 20,000 total limit. It's not an additional allowance. And then, the best ones for that, you're getting, around 4.5% for. I'll do another video on the current best ones that you can get on the market for those. And then just in terms of and with the lifetime ISAs, you can, if you don't end up buying a house next year, there's no time limit in that regard. You've got to be over 18 to start them, and there's a age cutoff for them, etc. But also you can save it as a retirement, amount. It doesn't kind of disappear or what have you, but you don't want to remove it unless it's for a house or unfortunately terminal illness or retirement, basically. So there's vast connotations to it. In terms of just a regular ISA, so imagine if you put £4,000 in your lifetime ISA, you have 16,000 remaining for your regular ISA, and the two main avenues are going to be a cash ISA, which works relatively similar to a regular savings account. Some of them are flexible, some of them aren't. But the interest is not taxable, so that's the main benefit, I suppose. And then a stocks and shares ISA, which you're basically investing in market products, so your investment can go up and down. So hopefully that's a good reminder. Remember, it's not financial advice, but if you find those helpful, follow me for more videos. And I'll direct one below.